The IMF wants to get into the action. They warned the G-20 nations that widespread proliferation of crypto assets could lead to banks losing deposits and curtail lending. The report, called The Macrofinancial Implications of Crypto Assets, was given to the G-20 in February, but made public today, again, after the collapse of Signature Bank, SVB, and Silvergate. Will, I'm going to toss this one off to you. What do you make of the IMF making this report public today? It feels unrelated, but they're really trying to get in there and say, like, I told you so, but really, did they tell us so? Thank you, Wendy, for putting on the prop that is so needed for this segment.
Yeah, Wendy, get ready, because the story's coming to you next. I don't know how I think about this. I need to go read the report. So we have the story up on CoinDesk.com. It's a summary of what they've issued. Yes, the timing is immaculate, can you say? It comes right after this whole banking debacle in the United States with a bunch of banks that had a lot of crypto customers. So maybe it was timed. But if you work in media, you work in content, that's also when you want to publish something. So maybe they just snuck it out the door really quickly, even though they've been working on this for a while. That could be the case. That being said, this whole stuff with the IMF and all these banking partners around the world, we've seen this for quite a while, right? So this is not a divergence from any sort of different discourses they've had over the last few years. Most notably, they've really punched down on El Salvador, saying that they should not be purchasing Bitcoin and that they should be focusing on their internal state of affairs with their loan books to the IMF. That's the story that really came up to me when I was looking through this recent headline. It's just a continuation of the past narrative. People in IMF and the traditional system, especially government regulators, they don't like crypto. It's too volatile for them, and they don't want that. That being said, if you're looking at the underlying facts, it does seem like this is more of a traditional banking issue with the monetary policy of the United States as opposed to just crypto. Crypto definitely had a part to play in this. I don't think that Silvergate would be in the position it's in if FTX had not exploded. But we do have a larger problem on our hands, given all the other banking stocks are going under, given that SVB is also going under. There's a lot of problems out there right now. And IMF is just, taking its moment in the sunshine to say, hey, we told you so. Wendy, up to you.
They got her, folks. They got her. They silenced Wendy. They silenced Wendy.
You guys silenced me on purpose. That's because I'm wearing the tinfoil crown. I knew it. No, honestly, I get the concern that crypto is a little bit risky, but in America, you have to have a bank account to do anything. You need a bank account to essentially pay your employees, to have a mortgage, to be able to rent a place, to pay your bills, all of these things. So the banking industry just can't dictate who gets to open a bank account and who doesn't. I think that that's illegal. It's kind of part of redlining, but not. So again, people should not be censored. People should be able to have access to their money and do as they please with their money, just as long as they're not doing anything super, super bad. But at the same time, crypto is volatile, but so are tech startups, so are different startups, so is capitalism, so is entrepreneurism, so is pretty much doing anything with your money. So I'm not understanding what the issue is. I know it's all about control, and I know they want to issue in a CBDC. And that's all I have to say about that before I get silenced again and my crown is falling off.
All right, that's it. Also volatile, U.S. Treasuries. How crazy is that?